Hey everyone, Paul the Virtual Investor here, and today I'm going to dive into the end of 2021, the total numbers here, where inventory sits, where numbers are sitting, and what foreclosure activity is looking like. All right, I'm going to pull it up on a screen share. We dive into it though. Make sure you click on the like button, the subscribe button, and hit the bell notification so you get notified whenever we put out new videos. So home prices hit an all-time high as it became even more common for home buyers to find buyers within 1 week, for home sellers to find buyers within 1 week. And partly it's because of the record low inventory. Apparently the week of the 28th of November, again, you're in Thanksgiving week there, so the numbers tend to be lower, especially towards the end of the year when you're in holiday time, but they hit a record low, the inventory did at the end of the year, which is part of the reason it's pushing, right, these homes selling so quick. You just don't have enough supply, so people are jumping on offers or making big offers as quick as they can. Numbers are still going far too high. It's going to continue into 2022 here. The trend will continue until we start to see a little bit more inventory come up. And you may ask, how are we going to get additional inventory, right? Because it's not looking good overall. But before I get into that, let's just look at what the median home sale price was. It hit an all-time high of $360,375. That's up 14% year over year, and up 31% from 2019, and even up 1.5% from a month earlier. So the prices are really increasing. They've been increasing at basically a record rate here over the last few years since the pandemic hit, and that may continue, as I said, into next year unless rates creep up. If the interest rates creep up a little bit, we're going to start to see numbers come down slightly, unless there's a big increase in interest rates, which I just don't see happening. I think you're more likely to have just a slow, steady rise. And what that'll do is it'll stabilize the pricing, and the pricing shouldn't be increasing anymore at that point. It should stay fairly balanced. If it increases, it'll just be ever so slightly. Now let's look at foreclosure activity here. And this is according to RealtyTrack here. Actually, Adam is the owner of RealtyTrack. RealtyTrack really keeps the foreclosure data here. So Q3 activity is up big. It's up very big. So nationwide, it's up 11% from a year ago. And foreclosure starts are up 67% from a year ago, which is huge. Obviously, with the moratorium, you had a lot of mortgages that couldn't be foreclosed on, the government-backed mortgages. Private mortgages could, which there are still plenty of, but the vast majority are still government-backed mortgages. So we look at the foreclosure process started here in Q3 of 2021, and it was up 32% from the previous quarter, obviously because the moratorium was lifted, and 67% from a year ago. So the numbers are really starting to hit, and what you're going to have is different states are quicker to foreclose than other states. So you're going to have certain states have more inventory initially, and then some of the more difficult to foreclose states will have more inventory later on. It might take a year, and in some cases two, depending on what market you're in. But with this, we're going to have additional properties come onto the market. Problem being, a lot of these would be distressed properties, right? These are distressed people who don't have money to do the repairs, renovations, and hence is why it's going into foreclosure, and they may even be upside down on it. So because of that, you're going to have more distress, which is great for investors like us out there to be able to get some pretty good deals. However, we will have competition from first-time homebuyers on properties that are, in reasonable shape, that they know they could put some work in and get some sweat equity there and increase the values. So that's kind of what we're going to run into here. But in talking to Hudson and Marshall, talking to Zone, auction.com, they really see the numbers really starting to not skyrocket, but really increase. And they're telling me Q2, Q3, Q4, you're just going to have a continuous increase in inventory. So it's going to be a pretty good amount of foreclosures coming to the market, which we're really looking for. Great opportunity for us to really increase picking up rentals, picking up flips, and wholesale deals. Hopefully you guys will be into that too, and look at some of these great REO deals that are going to be throughout the country here in 2022 and then continue into 2023. We'll see what happens with rates, whether that changes anything. Obviously, if rates were to creep up more than expected, you're going to have more inventory going. More people are going to put properties probably up for sale, or more people are going to stay put in different markets, certain markets. If they're not going to get the number they want on a property, if the prices stop increasing, you're going to have less people probably listing these properties. But again, if it becomes a job issue where they got to move because of a job, that's a whole other scenario. But anyway, just look forward to potential more inventory here in 2022, especially starting Q2, Q3 especially, and Q4, where we really should start to see quite a bit more going into 2023. So that's kind of what I'm seeing for this year here. We'll assess it month by month, quarter by quarter, and again, do a big assessment at the end of the year. And hopefully you guys like this here, and we will catch you at the next video.